Fantastic. Good morning, everybody. Thank you for joining us today. My name is Sam Burgess, and I'm a project manager with Rangelands NRM. I'd like to begin by acknowledging the traditional owners of the lands of which we meet today, the Whadjuk Noongar people, and I extend the acknowledgement to the many traditional owner groups across the regions that Rangelands NRM works with across Western Australia. I also recognise all Indigenous and non-Indigenous land managers joining us today. I recognise there's a lot going on and there's a lot expected of land managers in today's world, and nature finance is another emerging consideration that we're hoping to cover today. This webinar is supported by the Australian Government through funding from the Natural Heritage Trust under the Climate Smart Agriculture Program. This year is also the International Year of Rangelands and Pastoralists, and this event aligns with that focus. We're really proud to promote the importance of the WA Rangelands region, its people, and the efforts being taken to care for country and allow communities to thrive. I'm super excited to introduce the two speakers that we have today. I've done a bit of work with both of them in the past, and there's so much value that they both bring from different angles in the nature finance space. Firstly, we have Fiacre Kearney, the founder and executive director of Forever Wild Initiative. Fiacre leads the development and application of innovative nature finance models to protect intact ecosystems at scale. And there's several properties that Forever Wild manages in the Murchison, which is a really exciting new piece for the WA Rangelands. We also have Dr. Amanda Hanson with Accounting for Nature. Dr. Amanda Hanson has more than 12 years experience in environmental research, natural resource management, and the creation and delivery of educational material, and is a well-known face of the Accounting for Nature movement. A bit of housekeeping before we get started today. The session will be recorded and shared on our YouTube channel. So look forward to getting that out for those that aren't able to view today's session. We also have a poll in our chat. It would be great for our organisation to understand those that are attending and what you're interested in from today's session. I think it's really important that we focus our content the right way and target the right pieces of information around this complex field. And I'll also make sure that I follow up with a bit of feedback after this session. I'd love to get your thoughts, be it from land managers or others attending this session, about what you want to focus on going forward around this subject. There's also going to be a live Q&A, so feel free to drop in questions as we go. We'll get through the speakers first, and then we'll return at the end of the session to address a few of those questions. And any unanswered questions we can look into following up after as part of our survey. So I really appreciate you coming today, and I'll hand over to Fiacre for our first session. Thanks, Fiacre.
Thanks, Sam. Thanks, everyone, for joining this morning. So let me just share this. Right. Great. Okay. So I've been asked to kind of, I guess, be the first presenter, and I wanted just to discuss, what is nature finance itself, and I'll go through that in broad terms, and ideally how it's applicable to what I believe the audience to be today. But I suppose the question is, nature finance is a term that's been very, very broadly discussed over a number of years. And the question is, two questions: what is it, and does it actually deliver on the promise for nature and for economics? So the Forever Wild Initiative was set up to explore these questions, really, and to move the concept of nature finance from a concept to action, and to be able to set it up so it's scalable. So what we do is we effectively build the financial architecture around a project or over a landscape that allows finance to flow to that landscape. And we do it in a way that ideally is equitable to the landholders, in this case, in one case ourselves or other partners we work with, but also where nature is centralized and is the concept of a deliverable for nature, that restorative economics is effectively immutable, and that it's quite a hard thing to achieve. So as Sam said, we have a couple of properties in the Murchison in Western Australia. That's where we have four properties in aggregation. And that is where we really defined how nature finance can work for us. And we uncovered a whole range of different challenges in going from talking to an investor to the deployment of different types of capital that protect nature. Let's go to this, make sure it goes down. Okay. So what is it? So it is more than a trend. I've had that raised to me recently, so I just thought I'd put that in. It is more than a trend. It's actually a necessity. And the definition of nature finance must be one that centralizes nature. So we'll get to that a little bit further down as to how do we do that, how to define what it is that we're seeking to achieve. It does include things like climate finance, so it often intersects with climate finance, but there's a couple of perspectives on that. Green infrastructure, and I think for this audience, environmental markets and regenerative agriculture are really fundamental. Nature finance itself can be direct investment, so you've effectively upstream investment, talking to investors or financial institutions, but it can be downstream where you have a commodity, for example, well, let's say livestock production in the Murchison, where that product, in our case, beef cattle, is linked to a verifiable standard that is then brought to market. And that helps to close the loop in the finance question. So the key thing about nature finance is when we're talking about nature finance from a investment perspective, there needs to be a closed loop where the returns, cash flow is generated and goes back to the investor. Nature finance itself, fairly broadly, includes public, private, philanthropic capital. But in general terms, it is assumed that when you talk about nature finance as opposed to philanthropy, it often goes towards investment to commercial or sub-commercial grade investment. And that's got a number of conditions attached to it. So economically viable, generating cash flow, supporting investment returns, and non-detrimental to nature. And that final piece is really what separates it out from any other kind of investment or investment into an asset class. The outcomes of nature finance ideally would be linked into global targets, and they include the global biodiversity frameworks, science-based targets, something where we can measure against, that's been largely agreed and that many investors, particularly large institutional investors, are aware of and would like to report against. So that's the concept, that's the framework, and within that concept, you have a wide range of instruments. So instrument can include debt finance, equity, or any sort of kind of financial instrument that can be designed. The challenge with nature finance is that we haven't really designed those instruments with nature in mind. We've largely designed those instruments to be exploitative. We see nature simply as a resource rather than an asset class that needs to be protected, and obviously very different to most asset classes, which are not alive or in a state of flux and change. They're fairly static. So we have to design these instruments for longevity. And I'll expand on that a little bit further down the track. Different types of vehicles. This is actually pretty important. It's almost a whole presentation in itself, the type of vehicle where finance can flow through from the investor down onto the ground. And it's important because the vehicle itself is normally the governance structure, the legal entities. And if we are truly to protect nature and really achieve a nature outcome deliverable, then we need the governance in place to do that, not just asking a landholder or a steward of land to go and do something where they don't really have, well, maybe the governance or decision making is taking away from them through the financial instrument. So there's an intersection, there's a really important piece here where things have to dovetail together. Okay, so I know that's fairly high level, and I'm going to try and break it down a bit so it's much clearer, right? So we often hear also the term natural capital, and natural capital, I think, can be best described as the natural assets, the soil, the water, the trees, biodiversity that sits. And if you take a particular property, the natural capital would be those assets on that property. The thing is that natural capital is only really capital if you can find a way to leverage it financially. And that's where the stuff I was just talking about, the right instruments, the right way to deploy the finance is really important, so that the natural capital can be valued and then can create the business enterprise and the return back to investors. So natural capital itself, without being part of a nature finance construct, is a little bit meaningless, and it all has to be thought of as one. So environmental markets, I think the question, of course, will always be, well, how is this relevant? And I've got a couple of examples there. So environmental markets, regenerative agriculture, and biodiversity-linked finance, which would be an example of an instrument. So if we take environmental markets, obviously carbon, biodiversity, I presume that some of the audience will have some engagement with carbon markets. And that's a great example of a climate/nature finance mechanism, which creates an asset out of carbon and allows the landholder and obviously investor to make cash returns. There's a cash flow based in that. And just that one alone, if you look at environmental markets, they're quite a good example, because you need cash flow out of a nature finance project. You need a very clear loop back. You need investment that goes in there. You need a way to deliver on it. You need a market or an off-taker. So you've got to have these components for it to really be considered a nature finance commercial grade or sub-commercial. They're quite powerful, right? If we can get this right, they're actually really powerful, but they're not without risk. And they're not without risk for investors and for landholders. So we have done a lot of work in this space in how to try and understand the risk and how to manage it from our perspective and from an investor's perspective. It's a bit of an evolving process, I think it's fair to say. Regenerative agriculture is also an investment, obviously trying to restore the land that's maybe not linked to carbon or biodiversity, not linked to those markets. We're trying to do a more sustainable project, but there needs to be a nature outcome deliverable. What is the actual benefit to nature? How is that defined and how is it financed? And so this leads to a potential instrument, which is biodiversity linked finance. This could be a loan potentially from a bank. That's an example of instrument. And when I get down to the page where we talk about risks, I think it's really important to discuss, what does that look like? What does an instrument look like? And here we are, benefits and risks. Okay. Just 1 second. Bit of a technology issue there. Okay. So the benefits and risks. So this is a piece of work that we did last year. There's some terminology here which I think is pretty important when you're on the ground trying to negotiate with a financier or investor, or whether you're an investor looking at a nature project. There's a term there called NOD, and I see the formatting's gone off a little bit. NOD is the nature outcome deliverable. What is it, if you're out on a property, what is it you're saying that you can deliver? The nature outcome deliverable risk is a factor of what is the likelihood of success and how much does it cost? And this is a really important piece, which we found in our experience is often ignored by both parties. How much does it cost to deliver this nature outcome? Because the more it costs to deliver, the less money there is to give to the investor. So that's a return on investment, which is F there, that finance. And then the nature return is, have you actually delivered it? And I really like the accounting for nature framework, because the accounting for nature doesn't assume, Amanda, this is my perspective, I'm not trying to take over your talk here, but it doesn't assume that a success is binary. You're either success or fail, because nature is obviously a continuum. So what is that return for nature? So this little circle is pretty important in an investment discussion, and helps us to understand the risks. Because if you're a landholder and you sign up to a nature finance instrument, let's just say it's a bank loan, and the bank says, well, we will reduce your interest rate by 1%. And that might seem pretty good. Let's say on a $5 million loan, you're getting approximately $50,000 rebate every year. Is that $50,000 enough to deliver the nature outcome? But you're not going to know that unless you cost it out clearly. And if it's not enough, then that rebate's not enough. And you can find yourself in a cost negative position. So these, when I talk about some of the risks for landholders in particular, this is something that's really critical. That can be hard to negotiate if there's power imbalances. There's often a need. You're looking for finance for some way. You want a nature finance structure. You want to protect the landscape. You want to maybe get into a succession planning phase for restored property. You need that money. You need that finance to flow. But if there's no instrument there in place, then often you'll take what's given to you, and that can be risky, right? So I've got down there costs. Really costing out the nature outcome deliverable. Understanding that success is not binary. It's not a pass or fail. It's often a continuum subject to multiple variables that we may not have control over. So I don't want to make it sound too risky, right? Because the benefits can be fairly significant. The benefits of nature finance, if it's done well, the benefits can be, a finance which is really conducive to protecting nature. Also, potentially, by doing so, to increase the ultimate value of the property, which can be the time when you want to exit. So, the potential benefits economically to proponents and to investors for nature finance done well can be quite significant. Okay, I want to just touch on this a little bit. Nature outcome deliverable. I've mentioned it a few times because in nature finance, in our view and in our experience with multiple negotiations now under our belt and some very large properties in Western Australia, in Queensland, some work we're doing overseas, this allows the conversation or the negotiation for investment or how the deal is structured, allows it to be very clear. And if we look at environmental markets, for example, we want to be very clear how much carbon we are generating. The other thing that needs to be clear is how much does it cost? So one of the challenges in carbon markets is that there's often no floor price available to the proponent. Now, without a floor price, you might end up delivering the carbon outcome for more than you actually make from it. Now, we're lucky in the sense that this infrastructure for carbon markets in Australia is quite strong, and therefore the market has strengthened. But it is feasible that the market will drop. And with no floor price built in, and you don't know how much it costs you to deliver the carbon, there's a risk there. So that's really important. Nature, of course, is a living asset. Ecology is complex. Finance does not like complexity. So having a nature outcome deliverable, that's the NOD concept, we have a very defined outcome for nature, a clear set of restorative actions that are costed, a clear biodiversity outcome, a species outcome, population outcome, whatever it might be. It's very clear. And that allows us to reduce the complexity in nature finance and allows a much greater sense of transparency for all parties. And it's measurable. It has to be measurable. So we often talk about nature and the need to measure it. We also need to remember that in investment, nature finance, investment metrics need to be measured. What is the return on investment? What is the ultimate terminal value of that investment? How's it going to be structured? That's all there. That's all pretty well defined by financial institutions and financial instruments. What we're trying to do is dovetail in the ecological side and put it on the balance sheet by understanding how much it costs and what it is and what are the risks, and making sure that that's not really something that can be changed. Just because the project may not be succeeding in the short term, that could be due to an external variable like a climate event. So we need to build in all of these variables and buffers. And this is really important. As a landholder, it's really critically important. I'll give you an example. We did some deals in Western Australia. And it took us a long time to get those deals through because a lot of this stuff that I'm talking about has not yet been defined in a lot of nature markets. So we had to build the tools to be able to have these negotiations. But to go ahead and sign these deals off without having all this built in and understanding the costs and risks to us and to the investor would be kind of a little bit foolhardy. Okay, so concept to reality, revenues and cash flow, very kind of fundamental as part of a nature finance deal. Environmental markets, of course, are well structured for that. We can understand, model out, maybe say carbon, for example. What are the carbon outputs each year from a property? What's the likely market? Is it going to be restorative, protective? In the case of carbon in Western Australia, I think it's pretty clear that it's very much geared to be restorative. But a lot of nature finance needs to follow the same avenues. Is it economically and ecologically viable? Now, this is a really interesting one because a lot of nature finance has this different timeline to ecology, right? So a lot of investors will want to be able to exit in 7 years or 10 years, unless you can maybe move to a bank. So a lot of private investors, institutional investors, often playing with other people's money, they don't have the luxury of running a 20-year project. But 20 years might be what it takes to achieve the nature outcome deliverable, unless you can find a useful incremental scale to measure against. So meaningful time horizons are really important, and important to understand that if you as a proponent are engaged in a negotiation with nature finance, are you signing up to something that doesn't meet the timelines of the investor? In which case you could be signing up to fail. So you've got to be very cognizant of this juxtaposition. You need an existing or future market. Environmental markets, certainly for carbon, do exist. Biodiversity, maybe less so. But to make a closed deal, we do need that market, or we need the offtake arrangement that's going to generate that cash flow. The embedded protection of rights. This is really fundamental. Again, I think this is potentially a whole presentation. It goes back to that thing where I mentioned governance, the question of governance, the embedded protection of rights. I would be relatively certain that there are agreements out there between carbon service providers, landholders, that assign land rights in some form to the carbon service provider in Australia. And we find that highly problematic, because through some of these nature finance agreements, a lot of them have never been tested in court. A lot of this stuff which has been evolving is really open to interpretation. And so I think great care is needed when signing up to agreements as to what rights could be assigned over your land rights, or in the case of Indigenous peoples, sometimes their cultural rights, and they're not really aware of that. So we have actually just a bit of a plug here, but it is really important. On Thursday, we're going to release a report which talks about specifically around this issue in environmental markets and how to ensure there's much greater equity. And for us, in this case, it means equitable treatment of people and proponents, parties to the agreement, so they can engage equitably with the markets and they don't lose their rights. So this is something really important that needs to be, I guess it's an evolving space, and shared and transparent risk, like I discussed earlier. So this is my final slide, just nature. What is it? How do we measure it? Require a clear outcome deliverable. What is it? It's quantified? It needs to be quantified, it needs to support the investment case, understand how much it costs, what's the likelihood of delivery, what targets does it reach, what global biodiversity targets does it reach, is the investment that's coming in enough to cover the cost, does it justify the nature outcome deliverable that's being proposed by either the investor or the project proponent. All three parties, if you consider the investor, the project proponent, and nature as a stakeholder, all three parties need that to work. They need to understand that it actually can be delivered. And then you've got monitoring, reporting, and verifications, MRV. That can be very expensive. It needs to be costed into the nature finance instrument and the deal from the outset. There are multiple tools out there, and the selection of tool really depends on what needs to be measured. How much does it cost? It can't be a cost burden beyond, that makes the project unfeasible or creates a financial burden on the landholder. And it must be integrated into instruments. So it must be part of the negotiation from the outset. A real risk, and we've seen this play out, is where contracts and negotiations proceed, and just before, right on the 11th hour, there's a demand made for a particular monitoring, reporting, evaluation process to be followed, and it hasn't been costed in, and so it's not integrated as part of the negotiation or that deal. So that's problematic, and it often then can move to a case where if the MRV is too expensive, it becomes punitive. So if either you take this, or we have to increase the risk to ourselves as the investor, and therefore we need more money back, and it becomes effectively punitive. So this is stuff which is evolving in the nature market space, but really needs to be ironed out and understood in detail. Yeah, so look, I probably focused a bit on risks, and I think I don't kind of mean to have done that to put people off, but I think it's really important that we iron some of this stuff out, because we want to scale nature finance, and the potential benefits of this are very significant, economically significant for landholders, and ecologically significant. So it's fundamentally important to get that right. So if we acknowledge the problem, then we can tackle it. And I think that's where we're at, is that we're finding solutions to this, and solutions are definitely becoming available to a lot of this stuff and to a lot of these challenges. So I'm pretty positive. I'm actually very positive for the future of nature finance and environmental markets. And that's me. So yeah, thanks very much for listening, and thanks, Sam.
Really appreciate it, Fiacre. Thank you for sharing, and some really interesting information to take in there in this emerging field. Next, we have Dr. Amanda Hanson. Thank you, Amanda, for taking over and providing us your time. Fantastic. And I think
there we go.
Yep, just on.
Sorry.
Fantastic.
Let's redo this. Okay, now we're going. So I wanted to start today's presentation by giving a bit of a background information to Accounting for Nature. So who we are as an organization, and what we offer. And towards the end of my presentation, I wanted to move into how we integrate and interact when it comes to environmental markets as kind of one of the potential financing mechanisms that are available. So to start this off, Accounting for Nature is an Australian-founded non-for-profit. We have been around for about 7 years now and have started to grow internationally during this time. And we were founded from the Wentworth Group of Concerned Scientists. So they've spent about 15 years researching to develop a standardized way for how to communicate environmental condition. And they really wanted to develop something that was applicable, at the smallest project scale up to the regional and potentially national scales. But that simplified the way that we communicate the health of nature. So about 7 years ago, they turned that research into the non-for-profit that we are today. And so we operate the Accounting for Nature standard, and that really provides the guardrails for how environmental conditions should be measured and communicated, and it enables for third-party verification of the data, which means it can be independently audited to provide that extra level of rigor. And underpinning it all is really transparency. So we certify something that we call environmental accounts, and we're going to spend some time today talking about what that exactly is. But the core principle behind it is that all the data underpinning your kind of condition measures is publicly available, so that people can go in and read about it in detail to understand how it was measured and how it's being communicated. So this is just setting the scene for where we fit from a more kind of global perspective. So environmental accounting has been around for quite some time. So it was originally thought of in the 1970s. And some of you might have heard of SEA, the System of Environmental Economic Accounting. What SEIA does is really looking at trying to put dollar values on nature. And so that's looking at the stocks and the flows of nature and seeing how nature services really benefits us as human. And to be able to do that, we need to have a clear understanding of what the condition is actually like. So the accounting for nature framework can be used to underpin things like your SEIA accounting. So we focus really on the health or the state of nature. And we don't directly put a dollar value on nature. It's all about measuring and communicating the health of your forest or your soil or your water or whatever you might be measuring. We focus really heavily on three kind of core pillars in our organization. So the first one, and which we're going to focus most on today, is that we certify environmental account. An environmental account contains the data about the state of nature. We also accredit methods for how to measure environmental condition and how to turn those measurements into an index and a score that communicates the health of nature. So we don't write methods ourselves for how to measure nature. We provide guidelines for what's required when you develop a method, and then we have a science committee that reviews it all for its scientific rigor. And then lastly, we also focus a lot on capacity building. So helping professionals and landholders, non-for-profits, etc., understand what we do and how we can be implemented on the ground. And because we are a certification standard, we don't go out in the field and do any measures, but we provide training opportunities for experts who already work in this field, how they can incorporate environmental accounting into their day-to-day practices and services they provide. So I'm going to start talking about the environmental account development process and what it entails. So it all starts with that accredited method. So the method is really a recipe for nature. It tells you what type of data needs to be collected, how the method can be used. It tells you about what it's measuring. So methods can be really broad. They can measure, you can have a method that can be applied to any vegetation anywhere in Australia. They can also be really specific. So we have a koala method that can be used in Southeast Queensland and Northern New South Wales. So there's many different methods for various purposes. So at the moment we have 26 different methods accredited under our framework. And they all come with a particular accuracy level. And what that really says is how confident are we that when we apply this method to measure the state of nature, that the score we're generating at the end actually represents the condition or the health of nature. And lastly, they all also have a particular scale. So some methods are suitable for regions covering millions of hectares or those massive grazing properties that you might have in WA and the rangelands. Other methods are more so designed for smaller areas, and they might be more fieldwork intensive versus large areas that might rely more on things like satellites and drone to make sure they're cost efficient. So each of those methods that we have on our website have been accredited by us and reviewed by our science committee. And all of these methods includes instructions for how to calculate what we call the ECON score. And the ECON score stands for the Environmental Condition Index. It's used to communicate the state of an environmental asset or the health of the asset from a score from 0 to 100. So if we have a score of 0, that means that what we measure is either completely degraded or it might be missing from the area. And a score of 100 represents what we call the reference benchmark. So that's how we define that an undegraded or pristine state of this asset is like. So if we're talking about vegetation, in an Australian context, we often talk about what did the vegetation probably look like before European settlers arrived. So we're looking at, a lot of different indicators like what's the canopy cover like, what species do we have, what's the recruitment like, what's the ground cover, etc. And so your reference benchmark is really going to be different depending on where you are measuring. So even across a property, that reference benchmark might be different if you have different types of forests across the property. So the methods tell you how to, put your samples, where to put them, and then how to aggregate that sample data into this ECON score. And so we have 3 different accuracy levels to communicate how confident we feel that that ECON score represents the actual condition of nature. And the lowest we accredit is 80%, and then we have 90 and 95%. So 95%, we know that we can be really confident in that what we're talking about in terms of the econ score actually represents the condition that is on the ground. We also have an optional index called the PCOND that is available in some of our methods, and that allows you to measure the productive condition side by side with your environmental condition. So we have one method specifically for grazing properties, where you can look at the condition of your native vegetation, and you can also calculate the PCOND for your pastures. And then we have two soil methods that uses the PCOND. That's probably more relevant if we're talking about our cropping properties. And so all of this goes into an environmental account. So if we start from the bottom of this little petal flower here, it all really starts with the scope and the purpose. So deciding what you are going to measure and why you are going to measure it, and where you are going to measure it. And that then really informs what method should I be applying to measure this. Sometimes the scope and purpose is really simple. It might be, I want to understand what the vegetation condition is like across my property. Okay, then we need to find a method that can measure the vegetation condition across the scale or the size of your property and the region that you're in. Sometimes the scope and purpose can be really complex, like if we're talking about making really complicated green claims about investments we're having in nature. Perhaps you need to then measure your soil, your water, your fauna, and your vegetation. So you might need to apply multiple methods to measure all of those things. Every time you apply an accredited method, you develop what we call an environmental asset account. And so as a part of that asset account, you calculate the econ for everything you're measuring. So you might have one score for your vegetation, one for your fauna, one for your soil, and so forth. And all of this is contained in your environmental account. So the environmental account is really kind of the bucket terminology that contains all of the things we have measured in a location. So if you go to our website and if you look at the certified environmental accounts we have to date, you will see that they all come with certification passports. And this is really giving a snapshot of the environmental account. So it talks about the purpose and the location of the account. It goes down into what has been measured and where it's been measured, and it includes links for further information. And then it also includes links to technical reports. So each asset account will have its own technical report, and that goes into detail about why the particular environmental asset was measured and what the ambitions are with the asset account. It talks about the process of method application, it summarizes the outcomes, it shows you how that econ was calculated, and it also includes acknowledgement of any limitations in the process. So really provides that scientific and technical detail for anyone who wishes to do further due diligence. So to date, as I mentioned, with 20 accredited methods, so including those applicable in Australia, the UK, the EU, and Central America. So I think one of our methods have a global applicability as well. We have 112 publicly listed environmental accounting projects in Australia and the UK, and in total, they're measuring condition over 9.5 million hectares. So 50% of these approximately have been fully certified. And what that means is that data has been collected and it's gone through that certification process. For the other 50%, they are either in the stage where they're still designing their account and have just registered it, or they might be undergoing data collection at the moment. And then, as I mentioned, we also work with capacity building. So we have 117 accredited experts in Australia, and those are professionals who are capable of implementing the Accounting for Nature framework and the methods under the framework. And to help us grow, we also have accredited 5 training providers in Australia, so they can help with hosting educational events and workshops, etc. So I'm briefly going to talk about the environmental account development process because it ties into the environmental market piece we're going to talk about soon. So you start by designing your account, deciding on the purpose, the methodology, what you're going to be measuring, why you're going to be measuring. And then you use the method to plan, where do I need to collect my data and what information do I need in order to calculate that econ score. You then come to us, you register the environmental account. Once it's registered, you go out, you collect your data, you calculate the econ in a PCON, and you write the technical report. You then submit it for certification. So we have two certification pathways. We have the independent audit, which is required for any environmental market interactions, or we have AFN verified, which is suitable for those using it to inform land management practices. And then you need to maintain your account. So every year we need an update about what's been happening within the environmental account area. So disclosing things like your fires or your floods or replanting or whatever it might be. And then you're required to remeasure at least every 5 years. So in the kind of most simple use cases of environmental account, we have to informing your land management practices. So using the data to underpin how you operate your property, it can be to check the condition across your grazing pastures. It can be to understand if the replanting you're doing is actually showing a real on-ground impact. And so that's where the AFN verified certification pathway is really suitable because it's the cheapest option. So the example you see here is from Gundikum Pastoral in Queensland. And so they've been measuring vegetation and fauna and soil across their property to inform their land management practices. And as you can see from the table here, that econt is calculated at a range of different stages. So you can see for each of your different forest types across the property, how the econt score differs. And same with soils, you can see depending on your soil type, what the econt score is for each soil. And that can really help when planning management activities. So going to go into the market side of things. So to help support what we do, I already mentioned the science committee that reviews the scientific aspects of a framework. We then also have standards and integrity committee, and they review everything relating to environmental markets and various programs that we develop to support environmental market participation. So at Accounting for Nature, we write the rules for when and how environmental accountants can participate in environmental markets. We have also set up an independent new entity called Next Nature. So in the long term, the idea is that where we integrate with environmental markets and provide the rules, the actual process of assessing application and compliance with those rules will be undertaken by Next Nature. And that's really to support the governance structure to make sure that we at Accounting for Nature don't directly financially benefit from certifying a higher econt and having more credits issued, etc. So it's providing kind of a bit of a wall between the two entities. And under Next Nature, you also have the Next Registry, and that's a registry that supports our market interactions. So we're going to focus on firstly, one of our kind of existing market opportunities that we have, and that is the carbon linking rules. So all market initiatives I'm talking about today are really nascent markets. There's not a lot of price data to go on for any of these at the moment. We're still probably where carbon markets were about 20 years ago, what in nature markets today. And that's why what's been talked about earlier today about your offtake agreements is so important to make sure that you have secured that kind of income stream upfront. So knowing that, we wanted to create kind of an in-between pathway where you can link your environmental outcomes in your environmental account with carbon credits that you have issued. So we're bringing together the Accounting for Nature framework with the ACCU market in Australia. And so it's providing the opportunities to put a label on your ACCUs. And so that label is called a Next Carbon Plus label. And so you're linking the econt certified by an environmental account to your ACCU to be able to quantify and communicate the co-benefits delivered by carbon projects. So you can talk about the benefits delivered to vegetation or soil or whatever you might be measuring when it comes to carbon. So the units that have been linked today, there's 2 projects that have participated so far, and they're both available in the Next registry. So the carbon linking rules for ACCUs outpin all the criteria for when and how you can link environmental account data with your ACCUs. And so this is quickly just covering the process and see how they interact. So you would design and you register your account with Accounting for Nature, you build your account with Accounting for Nature, you certify it, and once you have certified your account and you have started to issue ACCUs, that's where you submit an application under Next Nature to link the two together. And so they become linked in the Carbon Plus registry with the serial number of the ACCU is being linked to the environmental account, and that travels with the ACCU as it's being sold and surrendered. So you have transparency about who purchased the unit and who can make claims about the co-benefits delivered by it. And so the next registry is a public-facing registry. So if you're interested, you can go online and have a look at what we have in there. I'm going to talk about standalone nature units. So the Nature Plus standard was developed by Green Collar about 5 years ago, and they have piloted it across almost 20 different projects to see where the standard works, where it doesn't work, etc. And last year it was handed over to Accounting for Nature for administration to take it out of its current kind of piloting phase and to ensure there's kind of a barrier between project development and credit issuance, which is really important. So we're currently undergoing really significant reviews of that standard, and it will be released over the next few months. And it's using environmental accounts to issue nature units as standalone nature credits. And so what the units really represent is that you measure for every hectare, as you improve 1 econd, you issue 1 Nature Plus unit. And that unit will have labels to it showing exactly what you're measuring. So it might be a koala credit, for example, it might be a vegetation credit. And it will tell you as well if that ecosystem that you're measuring is considered, endangered or threatened or whatever listing it might have. So under the Nature Plus standard, I'll show you the process actually might help this. It's slightly different compared to Carbon Plus. So you would still design your environmental account as normal and you register it with Accounting for Nature. You can at that time also check if it's eligible to be used under the Nature Plus standard. You build the account, so you go out and you collect your field data and you certify it. And that's when you enroll in the Nature Plus program. So the Nature Plus standard is quite a substantial document. It's about 120 pages, I think, at the moment. And so it outlines all the requirements for the activities that you can, the activities that you must be implementing to make sure that we're really issuing units based on things that aren't really already paid for under other state schemes or standards or required by law. So there need to be additional contributions to nature. You maintain your account with Accounting for Nature, and then you also submit annual reports on the Nature Plus standard, showcasing, the activities you're implementing, risks that are happening in the project areas, and how you're managing your land to make sure you see the greatest possible uplift in condition. And if you're eligible, you then issue your Nature Plus units. Last, really quick, we also work on a nature positive claim. So we received funding last year from NAB to support this work. So we currently are running a closed pilot with about 10 to 15 different producers, and most of them are in the grazing sector, to bring together what's being developed internationally from the Nature Positive initiative, but making sure there's practical on-ground guidance for how do you determine what to measure and what kind of progress do you need to see to be able to make claims about having a nature positive contribution. So that aligns with goals that have been set globally about where we want to take the state of nature. So we want to recover it by 2050. Australia has signed on to this goal as well. And so we see interests from companies being able to say that they're actually contributing towards this goal that Australia has set. So we're currently developing those rules, and we'll be looking at piloting it across primarily the grazing sector to support the claims, but then potentially also support labels on things like your product packaging. And that was the final slide by me. I'm sorry I turned it into a bit of a wrap. I tried to squeeze a lot in those 20 minutes, but thank you all.
Incredible. Thanks so much, Amanda. Really appreciated the insight, and it goes to show there's a wide-ranging availability of services and products in this space, and it's a fast-moving field, and some things may be not fully off the ground yet, but it's all coming in very quickly, and I think it's crucial for land managers to get their heads around this stuff. It's super important. Thank you to both speakers. I think it's great having this diversity of presentations and perspectives when it comes to nature finance, and I can say that this is just the very beginning, and I believe there's more actors in this space. There's a lot of interesting perspectives that we need to include as land managers look for either diversifying their income, looking for productivity value on their property, and many other reasons. So thank you to you both, and we'll now go to questions. I see a couple in the chat, and I'd like to firstly thank Imogen for her question, and that will be directed to FIACRA. And the question was, can you please talk more about how land managers may unknowingly hand over land rights in the carbon farming process, and if you're able to answer that question from your perspective.
Yeah, sure. Thanks, Imogen. Thanks, Sam. So there's a couple of examples that we've seen come across our desk. Sometimes there are clauses that prevent you from dealing with your land. So you've signed up a carbon service provider or some other form of nature finance instrument, and then you're effectively prevented from dealing with your land, which in legal terms means you effectively can't sell it, maybe mortgage it, refinance it, without their express permission. And it's quite an interesting position to be in, because it's a service provision to the benefit of all parties. But because if you've obviously signed a finance agreement with a bank, in some ways you are risking your land rights if you can't make the repayments. But in the space of nature, there's a lot of kind of unknown, unquantified risks, and we believe that nature finance must be a shared risk. So rather than cascading risk down onto the landholders or land rights holders and saying, if it all goes wrong, then you can't effectively exercise your existing land rights without our permission. So that's one way. The other way is sometimes it's financially prohibitive. So carbon service providers can sometimes build in clauses where they expect to be paid out for the entire remaining period of the carbon service provision, potentially over 25 years. If you opt to remove them or sell out your property and another person doesn't take it on, doesn't want the carbon project or whatever it might be, effectively meaning it's completely financially unviable for you to exercise your land rights. So I think great care is needed. Obviously, this is an evolving space. Even though carbon markets have been there for a while, a lot of the stuff has not been tested in courts. And people will come in putting money up front and not, we don't have the tools to really quantify the risk of nature or enough data to really quantify how to get to the deliverable. So they want to compartmentalize that risk as much as they can to contain it, I guess, and then ideally cascade it down. So there's a couple of examples.
Very nice. Thank you for your help. We have a second question from Rodrigo, and it's a fairly big question, so I'll try and see if I can break it down. If ecosystem services from livestock systems are declining, as Rodrigo, I believe, is seeing in Spain, and the public sector or the government seems to be the main buyer, how can a market be developed when demand is limited to a single actor? So just in that emerging field, if we've got one actor, how do we approach that space? If anybody wants to tackle that question.
I'm happy to give it a shot. So if you look at that, you're talking about particular market buyer, type of buyer, which is a government buyer. But there are other ways, potentially, when we look at indirect benefits. So if a market be devolved, an off-taker, let's say, for a biodiversity-linked product, let's say a certified product, whether it's beef, some kind of livestock or cropping, where there's a very clear nature outcome deliverable and a premium can be applied, as sort of indirect nature finance that comes back in to support the restoration of the property. So that's getting more into a consumer market. There could also be corporate markets. We've talked a little bit about the very nascent field of biodiversity credits or other environmental credits outside of carbon. That needs to be evolved. Certainly in Australia, the carbon markets have benefited significantly from the government infrastructure that was put into place that helps to stimulate it and give confidence. But these are, I suppose, from an environmental market perspective, this is still under development. And a lot of it is voluntary around much of the world. Australia is one of the few places with a regulated carbon market. So it's a tricky one, and it's not a short answer, but there are potentially indirect options available.
Thanks, Fiacre. Appreciate you having a crack, and really interesting. I'd like to ask, if we don't have any more questions from the chat, I'd just like to ask a question from my side that could be tackled from two different angles, and maybe I'll just approach it with you first, Amanda. Looking at a landscape scale as to how we approach nature finance and natural capital baselining. I know that there's an example of accounting for nature doing baselining on a larger scale with multiple properties. Would you like to go into that that piece that I believe is in Queensland as an example?
Absolutely. So there's, I guess, a few different options that could be included here, but I think the one you're alluding to is the Bennett Mary Regional Group, who have a regional scale environmental account. So it's the NRM region sitting almost about halfway up along the coast in Queensland. And they are measuring the condition across multiple different environmental assets over their 5.5 million hectares that they're managing. And they've started by measuring the condition across their kind of mostly terrestrial assets as well as freshwater, or the eDNA method that we have to assess the vertebrate species in freshwater. But they're also developing a lot of methods to be applied at the marine space as well, because they do sit on the lower end of the Great Barrier Reef. And the really neat thing about this account, and if you're a landholder in that region, is that you can compare the econt from your property with your kind of regional average. So if you're a grazier and you're in a specific type of ecosystem, you can compare your econ directly to the average for other graziers sitting within the same ecosystem as well. So that allows you to make claims about how you sit compared to the regional average, and it might also help inform how you're kind of contributing to nature within your kind of regional setting as well. And it might open eyes for what's possible looking at other producers that are, producing the same thing. The average might be higher than where you're sitting, and that can be kind of your benchmark for where you want to head going forward. But then we also see your kind of bigger aggregate scale environmental accounts. So that can be landholders managing multiple different properties, applying that across them all. So we have a few landholders managing millions of hectares across many properties in Australia. And they use it as a tool to understand how those properties are tracking individually, but then also communicating how their kind of portfolio is trending as a whole as well.
Fantastic. Thank you, Amanda. And I think it brings into a bigger conversation, Fiacre, about do we need land managers working together so investors can see it as a risk reduction piece for nature finance investment? I know that Forever Wild has purchased 4 properties in the Murchison, and there's some really incredible assets up there that might be recognised at scale. Myself, I'm from the wheat belt. Farms down there often are 2,500 hectares in size. Should we be looking to work with our neighbours a bit in this space so investors can have that confidence?
Yeah, there can absolutely be benefits to doing that. And I think also when you apply most of your vegetation methods we have, it's really looking at that connectivity in your landscape. So bringing your neighbours on board with this can improve that kind of condition score for all of you, because it's not just looking at what's happening within your property boundary, it's also influenced by what's happening next door to you. But I'll hand over to Fiacre to do the more in-depth answer of this.
Well, I think there's 2 aspects to this, and Amanda's spoken about one, which is the ecological viability. So this is where it's critically important to understand what is the deliverable that's been built into the nature finance instrument, whatever it is. Is it something that requires landscape scale, in which and it goes beyond your boundaries, in which case, there are variables there that you would need to figure out how to co-manage with your neighbors. Or is it something that's really bound by property boundaries and can be effectively delivered by you? So that's the kind of ecological question. The finance question is somewhat different. Investors, as you would have seen in my slide, do not like complexity. They want as much certainty as possible. So I think the risk there is, as you look beyond your boundaries to neighbors, it potentially decreases your probability of outcome, which can increase the expected financial return that the investor wants, because they see greater risk and greater complexity, which leads into their modeling. So we need more money back, to the point where it can become unviable. So that's the balance. We work a lot in that space to create the technical tools to dissect that, and for investors and landholders, both parties, to really understand what they're negotiating around. That I guess that transparency from a financial point of view is really important, just trying to dovetail it into ecological viability. So I've made the comment there about economic viability and ecological viability, and that really is the holy grail in a lot of cases in nature finance.
Fantastic. Thank you, Fiacre. Well, I think that brings us to the end of our session. Some very interesting discussions today, and I look forward to following up on this. And if folks would like to get in touch with some more questions, I'll be handing out a survey after this, and we'd love to get your perspective on how you found the session, what you would like to know more about, and if there's any particular questions we can hand through to the speakers. But I'd like to thank both Fiacre and Amanda for both their time and the different perspectives they've brought to this session. Nature finance is a fast evolving field, and we look forward to bringing more of this knowledge forward for land managers going forward. So thank you, everybody. And this link will go up on YouTube, and we look forward to hearing your responses from the session. Thanks, everybody.
Thanks, Sam. Thank you.
Thank you, Sam.